Hello, and welcome to the Motor Trade Radio podcast, powered by Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the car retailing sector, from factory to forecourt.
Well, you know what, Philip? I think we're still a bit too early for silly season, because putting together the headlines for this week's pod, there's plenty going on in the industry as ever.
Yeah, and obviously we're in mid of the school holidays, and some of the emails are a little bit low, but that's not affecting the headlines at the minute, is it? It's still very strong.
Yes, you're getting plenty of out of office responses to emails as well, then.
Yeah, so everybody's getting those holidays in, but it'll soon change. It will soon change as they all come back and get back to kind of normal business. So we've got a quite a busy show this week, haven't we, Curtis? But we have got one sort of shout out first, because it was one that we mentioned last week, and we did actually manage to catch up with Philippe, didn't we, this week?
Yes, Felipe Munoz, one of our favourite analysts. We've been following him for some time. He used to work for JATO. He's now independent, operating on his own. And it's what surprised me was that it was quite a while since we last had him on. It was about 18 months ago. So we had a good catch up with him during the week. And what we did was we focused on the Chinese brands, his take on how the Chinese brands are expanding primarily in Europe, but also other international markets. And he had some great insight that he shared with us.
Yeah, I mean, we will play a small snippet of that at the halfway point, but again, as we say with these kind of things, do listen to the full interview, because as Curtis said there, we talk about the Chinese new entrants, but thinking about more their strategy to entry, their investment in plant and factories in local markets, because of obviously the things going on with the Nissan plant and the plant over there in Valencia with Ford. So don't miss it. And we're going to try and we did say to Philip that we'll try and get him on a regular basis, that it's not quite as long since we last spoke to him. I couldn't believe it was 18 months, Curtis, when he did say that. But we will try and get him on a more frequent basis, just to keep us updated with what's going on in the market.
If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers, and decision makers on one of our Motor Trade Radio supplier special episodes, then get in touch at motortraderadio@yahoo.com.
So companies already featured in our supplier specials include Impel, Prospecting Dynamics, ETT, and Generational. And we're recording a new one over the course of the next couple of weeks. So we'll keep you posted on that. But if you would like us to profile your business, then just message Philip and myself at motortraderadio@yahoo.com.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
Headlines this week come from Car Dealer, Motor Trader, AM, and Motor Trade News. So in the first half of this week's show, we have the full lowdown on July's new car and van registrations from the SMMT, and spoiler alert, they're both up, they're both positive, along with top analyst Harry Bott's take on how the Chinese brands performed over the course of the month, plus Philip's roundup of new car sales across Europe and the US. We'll also have a roundup of the main used car retailing trends reported by the latest Cazoo Market View. Then in the second half, we'll look at some new research by Codeweavers on what's driving decisions among car buyers at the moment. And we'll finish off with updates on two businesses that have been making news in recent months, with the latest outcomes for Big Motoring World and Blue Finance.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
So as Curtis said, we're heading over to the new car registration results, and then we'll talk about the LCV results. But in car dealer, the headline is that July new car registrations jumped 11.7% as electric car sales soar. And this is that July saw a near 12% rise in new car registrations. Figures were boosted by a huge increase in EV sales, and the Ford Puma was July's top seller, and the Renault 5 was the top EV. So I think there was no. I mean, it's great result for the month of July, but I think we expected it to be a reasonably strong month as well, didn't we?
Yeah, as you say, it's a good showing for the market, up 11.7%. So that's just over 156,000 units sold in the month, which brings the year-to-date figure up by 9.48% to around, well, just over 1.2, 1.3 million. So, yeah, the new car market is looking healthy at the moment. And one of the things that the SMMT in the press release really sort of pulled out was the relative success of EVs and EV demand, because registrations were up 44.5%, although the SMMT did actually point out that this compares with fairly low uptake 12 months ago in July 2025, because customers were delaying their purchases, waiting for the full details of the electric car grant to be released. But that's not to take away from positive sales there for EVs.
No, and as you say, I mean, if you look at July in isolation, that takes the EV market share to 27.5%. And as you say, for July of last year, it was down at 21.3%, as you say, that buyers did delay. Hybrid electrics, or the HEV sector, grew 11.6% in the month, taking that to a 13.2% market share. Plug-in hybrid grew 33.6%. So still strong result there in plug-in hybrid, taking that up to a 14.9% market share. Petrol softened slightly, down 5.2% to just over 62,799 registrations there in July, taking their market share down from 47.3% in 2025 in July down to 40.1% in July of this year. And diesel is still hanging on in there. It's dropped from a 5.7% market share in 2025 down to 4.2% market share this year. That's a drop of 17.7% over the year, down to just short of 6,600. Get me numbers out there, Curtis. 6,600 registrations there for diesel. But as Curtis said there, the year to date, which sets, it kind of sets the scene a little bit of what we're expecting now for the full year. 9.5% up year to date, and to, as Curtis said, just short of 1.3 million. EV taking 25.3%, which obviously might cause us call out again in terms of still quite shy of the Z mandate threshold for 2026. Plug-in hybrid 14.09% share year to date. Plug-in hybrid 13.25% market share. Petrol 42.78% market share, and diesel just below that 5% at 4.57% market share. So I think, as the story does indicate, EV is the story for July. But again, it was a low month last year, wasn't it, for the market?
Yeah, very much so. And demand grew across all sectors, with private buyer, so retail uptake, rising 12.6%. Fleet was up 9.5%, and lower volume business segments was up by 61%. And just looking through some of the winners and losers for the month, and what I'll do is I'll exclude the Chinese brands, because they're very much covered by Harry Bott, and we'll go through his analysis at the moment. So if we look at some of the more established players, in terms of winners, BMW was up 2% for the month. Citroen was up a whopping 56% for the month. Kia was up, or just under 1%. And really other notable ones included the likes of Suzuki up 6%, Toyota up 16%. Volkswagen was up by 4.5%. And Vauxhall, strong showing for Vauxhall, up 19%. And just some of the losers, Dacia was down by 9.6%. Ford was down 15.4%. Hyundai down 19%. And Tesla, particularly bad month for Tesla, they were down 48%.
Yeah, and in the SMMT story, I won't do try and replicate Curtis's top 10, but Puma is holding first position for July and the year to date. Nissan Qashqai came second in July, but the year to date is holding fourth position there for the Qashqai. The Kia Sportage in third place there, but that holds the second place for year to date. And the year to date is held in third position by the JQ7. So yeah, a bit of consistency there in terms of the July versus the year to date, but a little bit of a move around of what's coming in there, because JQ5's in at seventh position there in the month of July. So it looks like the JQ5's going to be kind of creeping in there in terms of that top 10 for the year to date. And
Yeah, that's a good showing for Jaco, isn't it? Which sort of moves us on to Harry Bott's analysis, which what we'll do in the newsletter that goes out on Monday morning, we'll put a link to his LinkedIn post, which has his analysis, but it's also got his charts. And Philip and I are both big fans of the charts that he produces, because he breaks down the Chinese brands by brand, and according to whether they're a new entrant or an established player like MG, and he includes Volvo as an established player as well. But looking at his analysis, so Chinese new entrants now have a 12.1% market share, and that's actually up from 6.3% last year. So that's doubled. And just in July alone, the new entrant brands took a 14.8% share of the market. So that really does reinforce what we were just saying about, the market was very much driven by EV and Chinese brands. And he does actually pick out some of the individual brands. So Chery Automobile Company, the parent group representing Chery, Omoda, and Jaco, now have a combined 6.4% market share year to date and 7.7% in July. So there's some big figures there, aren't there, Phil?
there is, yeah, and it's sort of highlighting there some of those shifts and some of the where these new entrants are starting to pick up pace now, and whether as you say there, I mean, you look at JQ coming in, as a market share at 3.5% in the month. Some big moves there. BYD 4.2%. So again, you kind of look at what's happening here in that sort of new entrants coming up from behind, and we saw what BYD did over that sort of 2 years, then thereabouts in the market. Then we've seen what Jaco are doing, and now we've got Geely, we've got Chery, we've got Shanghai, and all the others that are just picking up that pace out there month on month. So it's going to be, as we continue through the year and read these numbers out, it's going to get more and more fascinating of who are the ones picking up that pace going forward.
Yeah, and he does actually make an interesting point about Jaco. So Jaco, obviously owned by Geely, who also own Volvo. So in the year to date, Jaco have sold 39,500 units, compared with Volvo at 40,000 units. So he does actually ask the question, how will that look by the end of the year? And the suggestion is that Jaco will be overtaking its, it was its senior partner, Volvo.
Yeah, as I say, it's not just about the competitors or established brands. It's brands within their own parent company, isn't it, that's playing out with this one. But we'll continue to bring you that as we get the information. We have got some of the European numbers in not all of them. We're still waiting on France and Germany at the minute. Just to put it in context, Italy grew 3.9% to 123,200 registrations in July. Similar with Spain, up 3.7%, just short of 102,000 registrations there in Spain. And the US actually fell in the month of July in the US, so they fell 1.6%, just down to 1.4 million in the US there. So some of those early numbers that are starting to come in from other marketplaces.
And just to finish off with the new markets, new registrations, we'll have a look at the van registrations. And the headline from Motor Trader is July pickup sales plummet 53% in 10-month free fall. That's that's an angle that we'll look at in a moment. But I think really the big story here is that the new LCV market actually rose by 22% in July to just over 28,500 units. July marks the fourth consecutive month of growth as year-to-date registrations reached just over 187,000 units, and that's up 4.3% on the same period last year. So a positive story there for the overall LCV market. But as I say, what Motor Trader focused on was pickups, which, and we've talked about this number of times over recent months about the decline of the pickup market, really down to the change in legislation as a result of the last budget, which kicked in April last year. And so they declined for the 10th month in a row, down 53% to 888 units. But as I say, I think the big story here is the continued recovery of the LCV market.
Yeah, like you say, I think in general it's a good story. I think you say those pickups, those double cab pickups. We know why that is. I mean, year to date they're down 55.7% year on year. So that is obviously a declining market share. It'll get to a plateau point, won't it? And then start to level out. So next year we'll be talking about these numbers, and it'll be minimal change. It's just a back of the taxation changes there. But as you say, that I think all in all, with what's going on in the economy and everything else, I think a great story for the commercial vehicles there. But we're heading over to Motor Trade News, and this is, I know, something that you have been involved with, Curtis, that dealers not meeting used EV and hybrid demand. Cazoo finds, saying searches for used EVs on Cazoo doubled year on year in July, whilst EVs accounted for 6.9% of all Cazoo listings compared to 6.5% last year, which is interesting reading this, isn't it?
It is, yeah. So it's really looking at how strong buyer demand for used EVs and hybrids were over the course of July was not matched by supply. So what Cazoo found, and as you say, I did work with the team at Cazoo on this for their market view. The searches for EVs on Cazoo doubled year on year and increased 14% for hybrids. However, these alternative fueled vehicles only represented 17.8% of cars listed by dealers. And that's only marginally ahead of where we were in July last year at 17.4%. And certainly down on the peak that was achieved in March this year of 21.3%. And as you mentioned, EVs accounted for 6.9% of listings compared to 6.5% in June and 6.5% last year, while hybrids dipped month on month from 11.2% to 10.9%. So very much on a par with last year. So it's really highlighting the opportunity there is there now for used EVs in particular.
Yeah, and I mean, it's always great detail within the Cazoo market view because it goes into sort of average days to sell, it goes into average prices. So the average price of used cars listed on Cazoo was down for the third consecutive month reaching 17,397, a decrease of 0.4% month on month. The average EV listed on Cazoo in the month of July was priced at 24,200, whilst hybrids were priced at 24,259, and saying that the July price drop was seen across all vehicle age groups, aside from cars over 10 years old, which were up 0.7% month on month and 5% year on year. So some good insight there in terms of that, that age profile, particularly on those over 10-year-old cars, Curtis.
Yeah, definitely. And what we'll do is we'll put a link to the story in the newsletter, as well as a link to the press release, which has even more detail.
Well, after the break, we'll be back after an extract from our interview with Felipe Munoz.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Cazoo.
And Philippe, staying with Europe, with the UK sitting outside of the EU now, how much more attractive is the UK market for Chinese brands looking for fast growth and coming into Europe?
Look, it is very attractive, and I would say the most attractive market for the Chinese car makers right now in Europe, because it's not part of the EU, so it doesn't have to follow the trade rules imposed by the European Commission. So making of the UK, let's say, a more open market to imports. And actually, you can see those that was in the figures. The UK is now the biggest market for Chinese car brands in Europe, ahead of Germany, and not only in terms of volume but also in terms of market share. And this is the consequence of less restrictions. A consumer base that is more open to new brands. The UK, unlike Germany and France, its car industry is less. Its local car industry is less big and less powerful. So it's easier for new entries to gain traction, and this is exactly what is going on in the UK. During the first half of this year, the Chinese car makers, the Chinese car brands, which is this is important to clarify here, because one thing is the Chinese car brand and a different thing is a Chinese car, because there are many cars produced by traditional car makers in China and exported to the world. When I talk about the Chinese car brands, I exclude those. So I'm excluding, for example, the Tesla Model 3 coming from China. I don't include it as a Chinese brand. So the numbers for the Chinese car brands show that they already have more than 15% market share in the UK, which is one of the highest in Europe. I would say the highest. It's more than what you see in Spain or Italy, where they have also gained a lot of traction. So yes, the UK is the most appealing market for them right now in Europe.
And that really supports the analysis from Harry Bott on July's figures, doesn't it? Which we spoke to Philippe before the July figures came out, but some great insights in our conversation with Philippe. And I did think it was interesting that he identified the UK as the biggest market for Chinese brands by volume and market share outside of China.
Yeah, no, I think that's the thing now. I mean, what Philippe was trying to clarify, what is a Chinese brand and what is product coming out of China that actually isn't owned by a Chinese manufacturer wholly. And, we talked about on the podcast, haven't we, with the Nissan plant and the Ford Valencia plant, and what does that mean for the future in these joint ventures, these, manufacturing tie-ups and things like that. But, clearly, Philippe sort of expanded on some of that, and we talked about GWM, didn't we, within the interview with him, and because obviously their challenge at the minute in the UK, but he's not writing them out off as a manufacturer. He believes that they are going to retrench and come out with product that the market will be interested in. So, yeah, I mean, as always, it's a great chat with Philippe, and if you said right at the start, if you've not listened to the full interview, then highly recommend you listen to that full interview with Philippe and connect with him on the social media channels as well.
Yeah, and he also shared with us so he looked at the established brands, the new entrant brands, but also the brands that aren't here yet, and he sort of rounded up brands that are likely to be here within the next 24 months. So really good insight and update on that part of the market. So as Philip says, do check out the standalone episode in your podcast feed.
Yeah, definitely. So heading back to motor trade news, and this is a story that's come out of Codeweavers saying that UK buyers name finance affordability as top priority, saying that the research also highlighted the continued importance of dealerships as 59.5% of respondents visited one for their latest car purchase. So I think this is based on a report looking at the sort of comparison between the UK car buyers and the European car buyers and trying to identify some of those behavioural changes and differences between those two marketplaces.
Yeah, and no surprise, but it's important to have these things confirmed from time to time. But no surprise that it's all around affordability and monthly payments. That's really what is engaging with buyers because they found that 51% of respondents said they wanted to see which cars they could afford based on monthly payments. And the research also highlights the continued importance of dealerships. At 59.5% of respondents visited one for their latest car purchase. And also it highlights that during the buying process for their most recent car, 47% of buyers, UK buyers, visited dealer websites. 43% visited the OEM's website, and 26% used social media for vehicle research, with Codeweavers saying that this really shows that digital channels are supporting and not replacing the role of dealerships.
Exactly. We'll put a link to the report on the newsletter on Monday morning, but just to highlight a couple of the comparisons, because I think the motor trade news story didn't really go into the European comparison, but they do look at the UK and Germany lead on digital omnichannel maturity, with Germany recording the highest fully online purchase rate of 28.7%, and the UK the highest mixed channel purchase at 27.5%. Spain and Italy show high finance usage but lower confidence, saying that only 27% in Spain and 25% in Italy describe themselves as very confident in finance understanding versus 44.2% in the UK, despite the higher finance penetration on both southern marketplaces. And finally, that France stands apart as the most finance cautious and dealership-led markets, and with the lowest finance transparency emphasis at 82.8%, with the highest leasing avoidance at 46.8%, and just 10.9% in completing purchases via a mixed online or offline journey. So there is some fascinating insight in there, doing a sort of a UK to European finance and consumer behaviour in the marketplaces. So like I say, we'll add a link to that on the newsletter on Monday morning.
And final two stories this week really wrap up a couple of ongoing stories that we've certainly talked about in recent weeks and months. And the first one is from AM Online, and the headline is "Court finds Big Motoring World's founder faced unfair prejudice, but dismissal was not wrong." So I do urge you to check out the full story because it is very, very detailed. And as I say, this story has been rumbling on for what seems to be quite a long time now. But this is the final resolution from the High Court, which found that Big Motoring World founder Peter Waddell has won his High Court unfair prejudice petition against private equity investor Freshstream over his ousting from the used car supermarket group. However, despite that victory, the judge concluded that Waddell's conduct justified his dismissal for gross misconduct from his role as chief exec of Big Motoring World back in 2024. So there's plenty to unpick in this story, isn't there?
There is, yeah. And like I say, this story landed just after we recorded last week's podcast, and there's been quite a bit of social media chatter since this story and the results broke. I get the feeling it's not going to end from some of the social comments that have been coming out around this. That I think there's still, I think they both believe they've won. I don't know, am I right with that one, Curtis? From what I'm saying?
Yes, yeah. I think you are right, and it's one of those stories that I mean, for me, I just wish it would just move on now.
Yes.
Because it is that there's a lot of nitpicking in it, and I don't think anyone's come out of it looking terribly well.
No, and I say I think there's going to be a little bit more on this just from what I've seen and heard in the media. So we'll continue to bring you the latest as it happens without being too sensational on it. But they say I think there'll be more on this to come. But finally today we'll head over back to Car Dealer magazine, and this is that Hodge Bank says Blue Motor Finance is open for new business after rescue deal, saying that the new owner confirms dealer and broker network will continue to be supported. The brand, the operations and employees transfer to Hodge following pre-pack administration. Historical compensation liabilities remain with the original business. Now, obviously, the majority of that is covered in the final paragraph of the story, and this is around the potential 50 million exposure to the redress compensation scheme that Blue Motor Finance could be liable to when it's finally resolved.
Yeah, and again, this is a story that was breaking just before we recorded last week's episode, and Car Dealer have been tracking it very closely, and this is an update that they published this week, and it looks like a good resolution because Hodge Bank has reassured dealers that Blue Motor Finance, under its ownership, is open for new business after completing its rescue of the lender through this pre-pack administration deal. And the bank has confirmed that Blue Motor Finance's brand, operations and employees have all transferred into Hodge MF Limited, ensuring the lender will continue supporting its dealer and broker network despite entering administration last week.
Yeah, and there's they do say that their immediate focus is on ensuring smooth transition and maintaining high standards of service for customers and partners, whilst providing stability for their employees. And saying that Blue Motor Finance, operated by Hodge MF, as you say, that remains open for new business. We look forward to continuing support of its dealers and broker network. So I suppose in good news, it survived. I think probably the worst would be that it went into full administration and gone. So yeah, and again, but it is that, as I said earlier, that final statement that Car Dealer did cover that they were or potentially are exposed to a 50 million redress fine when that eventually gets out. But again, the liability stays with Blue Motor Finance as part of this rescue package from Hodge Bank So we'll see what happens next on that one.
But that's all for this week, isn't it? So plenty of headlines there that we've covered. Do check out the standalone episode we recorded with Felipe Munoz, really looking at those Chinese brands, new, established, and forthcoming.
Yeah, and connect with him. He's, he puts some, if you're not, if you ever, when you scrolling through your LinkedIn feed and you see these graphs with all the Chinese manufacturers, how they're made up and everything else, probably a Felipe Munoz graph that is either coming from him directly or people are repurposing for themselves. So yeah, do connect with him and do listen to the full podcast into which goes link up those graphs, don't we? Through yeah. I'm glad he does them, not me. Yeah. Like Claude's doing it quietly in the background, but we'll see.
Yeah, and also many thanks to Harry Bott for sharing his insights with us this week. Much appreciated. But that's all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Cazoo.
Well,